There is big news. The Fed has announced a rate drop finally, and we want to know what that actually means for the Nashville market and specifically what it means for the Nashville short term rental market. I've got Pete Blankenship here with me. My name is David Goodman. We are with the Grow team. Pete, what it's September 18th. We just got the news. What is the news, and what do you think this means for the Nashville market?
Yeah, so the Fed has released a 50 basis point drop. So ultimately, it means that more than likely prices are going up, and rates for interest for you guys borrowing is going to go down. So if you're a cash investor, etc., someone who could put down a lot right now is really an excellent time to get in on the market, especially for short terms, where David and I over the last 4 to 5 months have really kind of seen a leveling out in reductions. We've been able to get some phenomenal deals for our clients over the last few months. However, my thought is that we might be kind of near that bottom of plateauing as rates have been up for some time. And a lot of these investors have been getting in. We've seen a lot of price reductions. Demand is still very much there for the city. Zonings obviously are still available. New constructions are available. But now is when I think, before prices start to go up and we start to see the demand really pick back up, I definitely think it's a sweet spot time. We're still seeing a lot of deals. So I think now is a great time to really put your head down and get focused on what you want and put a plan into place for making that happen in Nashville.
Yeah. So the 50 basis points, that's a pretty, and a lot of people have been focusing on this like really closely. I get the feeling that 50 basis points is fairly significant, and there are more kind of being projected into the future, right? Is this like the beginning of that? Is what I've been kind of
Yeah,
hearing.
and you guys can look, obviously, it's news. You can look into this, but there's plenty of great YouTube channels and people like, Clear Value Tax, I think does a phenomenal job on YouTube of just kind of explaining what all this really means. But they're planning to do, 3 to 4 um, reductions in basis points over the next 3 years that they have scheduled. Obviously, just like they've been doing, they're going to react to this stuff as they see data on inflation,
Right.
um, what's going on with the labor markets, et cetera. But their plan currently is to have several more reductions in rate over the next 3 years or so, which is only going to mean, we're at what, 6.5% or so today for a 30-year with, excellent credit. So we could see that drop, I'm not going to speculate, but substantially enough to make many of these prices, grand slam acquisition at their current prices, which means,
Right.
when they go up, just due to ability to purchase, it's gonna, really benefit.
So as a buyer, it makes, as a buyer, you feel like, and I think I would agree that we are at the bottom of the market in a sense, or pretty close to the bottom. There's not a lot of reasons why it should go further down if we are going to see some interest rates going down as well. Because right now, I think Alex from Lease Killers put it pretty well in his last video. There's buyers out there, but buyers and sellers have not been able to meet because of where interest rates are at. So a lot of them are sitting on the sidelines, and as they come back in, it's going to be, a little bit more competitive. So yeah, decent time to get in and make some moves as a buyer. What would you say for like sellers? I mean, I would imagine that it's equally a good time to start talking. If you're thinking about selling, if it makes sense for you, it would be a good time to start taking a look at what that actually means for you as a seller. I would imagine it would be better than what it's been the last couple of years.
Yeah, most definitely. I mean, as a seller, I would say last summer you really it was still very competitive, and we had a lot of people still interested in short terms coming in to buy. And over the last what would you say? I mean, 7 months. There's just been a lot of inventory.
Yeah,
You know,
way more than
way
ever has
than
been.
average.
There'd be there'd be two or three on the market a couple of years ago, and now there's over 100 on the
Right.
market.
And they're all over the place from revenue projections from what they're currently making. And a lot of this space is still very much backed on commercial evaluation. So
Or it should be, right?
yeah, exactly. It should be. So when we're evaluating property and when we're presenting our offer prices to prospective buyers and sellers, prospective sellers, we can easily, help them understand what a fair price is. Whereas, with the traditional residential in a lot of these markets, it's been, you know, the rates, et cetera, have caused those to go up. But these, we've been able to still get people a lot of good deals. It's just going to become more competitive for these deals. And ultimately, it's going to push the prices up because if you can get this same deal in cash flow now currently at $1,000 a month, $1,200 a month, when you're able to put the same amount down at a lower rate at the current prices before they are inflated, you're only increasing your cash flow, right now. So
Right.
I think that now's a great time to try to get in before we see the potentialing, of these back to ramp ups where it's more competitive. And the revenues haven't gone down 20%, like the prices of some of these have. So they're still there and there's still very good deals to be had. You just need to make sure that
Yeah.
you're with the right people.
And I think for me, I'm a little bit more optimistic, but cautiously optimistic. I think the way that it will play out is right now there are sellers who are a bit desperate and they're willing to look at a lowball offer. Like they're listed kind of high, but they're willing. We just found, been working on a deal recently where this isn't an offer that we would have put in, even a few months ago, I don't think. So they're willing to look at low offers, or they have been. I don't know. It probably depends on the seller at this point now that they're getting this news. But for the most part, I would say they've been opened to low or aggressive offers. And I think the main difference between now and what we'll see in the short future is there's still going to be opportunity as a buyer, but there may not be as much of an opportunity as there was with desperation from sellers. Like I still think you can get closing costs paid for and get some perks of the interest. And I don't think I don't know if the prices are really going to go up substantially because there's so much inventory still on the market. But in terms of like the concessions that you can get right now or you have been able to get, those might be in play, in my opinion. So maybe a leveling out on prices, but in terms of concessions, maybe those things are going to be more at play here in the future. So that's just what I'm thinking.
Well, and
So
I mean, and I want to just articulate, I believe over a 3-year run or so, right? Because that's what we're talking about. These rate decreases, et cetera, are planned over the next few years. It's not, which is a good thing for us. Because if you can say a price is at 600 grand now at 6.5%, and over the next 3 years, it's only going to get better from a rate standpoint based on
right.
current data. Obviously, none of us are predicting the future exactly, but this is their plan that they've articulated as the first of several cuts. It would only make sense from an appreciation standpoint over 3 years alone. And this negates entirely, Amazon and Oracle, two of the biggest companies in this country with two of
Right.
the richest men in this country, opening major hubs in Nashville. So we do most of our underwriting at 4%, as you know, David, just to be safe for appreciation.
Right.
Maybe we should, I'm just saying, over the next few years, if rates continue to decrease, prices are only going to increase in a city like Nashville with demand, big jobs, big money, etc. Number one tourist destination for bachelorettes and Airbnb. So, it's definitely looking brighter even, than it was yesterday, is the outlook that I really want to make sure that people understand about when I say the bottom. Is just that it
Gotcha.
really the trend over the next 3 years with rate reductions and the continuation of Nashville as
it should basically go up unless there's just like I agree. I agree with that. Okay, cool. Well, thank you for talking on that. If you guys have any questions or want to speak to real estate agents that are specialized in short-term rentals in Nashville, whether you're thinking about getting in and taking advantage and selling your property, or if you're looking at finding on and off market opportunities and having an expert look at and analyze deals with you, we are your team, the Grow team, now at Hive Nashville. We are here to help, and we go, when we go above and beyond, and you'll look at our video and our network of the buyers that we're working with, and the video that we're putting out there. We want to be the best. That is what we strive for, and I think we do a really good job. So feel free to reach out to us if that is you. And until next time, we'll see you next time.